Hey guys, what is going on? So this week has actually been pretty phenomenal. I mean, we've had a lot of price movement across the board, and yeah, the markets have really shaped up. I think what's nice about it is, although it's seemed a little bit more on the complex side, it has demonstrated that a good level of patience would have formed very profitable for a lot of people. And I think there's massive lessons in that in itself, because where a lot of people are looking at it today, they're not looking at it in a week to 2 weeks from now. So that definitely is a massive skill in itself, because I think a lot of people who are viewing the markets with a certain perspective, they want to see things with a level of instant gratification where, for example, let's just say you get positioned in the market here, right? And when you look at this on the 4-hour, really and truly, it just wasn't ready. But we would really want to see, let's just say, something like that, and then it commits and goes, right? But then what actually happened was it went, it came back, it did this, sold, created this, and then it went. But due to all the complexity there, where it didn't commit from this level here, and then we came in here, we didn't get the commitment from there, and then it came in again. Then you were like, well, I got positioned in here for some reason or whatever. And then what happened was the market did give you a clear message. I mean, it wasn't the cleanest, but there was a message here, and then you could have got positioned for the short there. But at the end of the day, it's not about just simply getting involved on the position. It's about just really understanding the psychology behind it. And you can see that if you measure between this, it was a matter of 6 days, but you can, I think perhaps there was a weekend in there as well, but 6 days, 6 trading days. And it just shows, like, you know, in those 6 days, you could have done a whole bunch of other things that set you back. And then let's say for any reason you did get involved, even with a bit of a larger stop, and you got involved here with even 40 pip stop loss, and then you walked away with, let's say, call it 3%. At that point there, you could actually argue within those 6 days you actually lost 3%, so you actually ended up with a break even. Or cases, if it was, you know, 4%, which was keeping you away from a break even, you wouldn't have really held through that. You wouldn't have been like, okay, I'm running 5. Perhaps maybe it's sensible for me to either close that off and lock in halfway towards my milestone target, or if you're going to be conservative and really just run this trade, you'll look at the higher time frame and be like, well, okay, the potential, etc. So I just think there's layers to obviously understanding that, but you can see there's a whole 6-day period there where, had you been patient during that period and just understood not everything has to go in those areas, then you would be able to capitalize and kind of move forward. So something I just wanted to point out, because I think not only myself, but there's so many other people that also struggle with that from time to time, where, you know, we want to see price, for example, and this happens a lot, right? And this is why I'm emphasizing on it, because it's a massive part of trading. And, you know, we want to see price kind of just, okay, well, it's tapped in here, now we're here, we want to go, right? But it doesn't work like that. You have to understand that it can still be days before it moves. And I think even with the yen pairs, it's a very good example. If I just pull up the JP225 and let's look at it over here. So even though you know, we're pulling back down, this doesn't necessarily mean we're ready to go. This is what a lot of people need to understand is, okay, great, we've broken, we're now in the valuable area, but this can still just kind of hover around in here for even another like 5, 6, 7 days, and then let's say it looks like it's going to be bullish continuation, and it drops off and everything changes. So once again, this is just something that I think if you're setting time frames and you're basically putting these things in place, where you're basically saying that, okay, well, you know, within the next 5, 6 days I want to scale up, it doesn't work like that. Because if you're saying 5, 6 days, and let's say across the board the market does something like this and you just don't have an entry, you don't have an entry. That's why we have to learn to draw a line in the sand, wait for the criteria, and we say, okay, well, when we have a solid push and it's clearing all of this, and we get a continuation which could formulate over a course of a day or two, or whatever, 4 or 5 hours, whatever your trading criteria is, then you can get involved on that. And then how you want to position yourself is up to you. If you want to go in with a larger stop, you want to protect against here because that's your invalidation criteria, so be it. And then you know you've got a 4 to 1 to the low but you're well protected. That's the sacrifice you're willing to take. But then at the same time, you have to realize that you will also be in a position for a longer period of time as well. So if for example you took a trade like that, and let's just say that we had the same price action, which is not always the case, but we had the same price action and it was like that, then let's just say for a minute that it was the same period. If we just measure that, you'd be looking at a period of roughly around about 30 days. So understand this, that you take a position like that with a larger stop, you could manage it to break even, etc., but at the same time you're holding that position for 30 days, and obviously with the JP225 swaps are fairly large, so obviously you'd probably not walk away with 4%, you'd probably walk away with significantly less, maybe even a minus, considering it's 30 days of holding, something like that. But just kind of putting out there that you have to understand that not all pairs will move like that. Sometimes you can get very impulsive price action and it can go down within 2-3 days. But once again, this is another thing that you need to adopt as a part of your mentality, that the market is random. Sometimes it does move impulsively, sometimes it moves correctively. We're not here to dictate it. We know our sequences, we know how price moves, impulse, correction, continuation. We know that this leg would have been ideally impulsive because we're coming from a larger correction. So if this forms as a larger correction, then we know that if we're going to continue to the upside, this leg is going to be impulsive. So we can capitalize on that impulsive leg. So then it actually gives you more of an edge to realize that, where am I better positioned? Well, I'm actually better positioned in these legs than trying to get positioned in the mess, right? But how do I decipher that? Well, we have structure, and it's very clear. I mean, JP225 is not the clearest one to do it, but if I go to Euro USD, for example, and if we just look at structure for a minute, we know that if we're going to complete with this, and potentially it lines up with that, and it comes into here, we know that on the sell, it's very possible that if we do that and we come in, this leg is going to be impulsive. It's going to have a very impulsive nature to it, right? So that's just something that we want to be really anticipating and being patient for, because like I said, this was pre-forecasted probably around about over 3 weeks ago now, right? When we created these tops, it made sense for this to potentially do that when we saw the corrective price action across the board of the XY related pairs. But this is something that I just want to really point out is, even though you can make do with structure, there was potential to go long on this because we understood what the structure could have formed into. And I think that's where pattern recognition comes into with multiple layers, is that we are not here to dictate what the structure will be, but sometimes when the market is giving you clues, we know what's highly probable. And with a structure like this, because I've traded structures like this multiple times, I know that it's probably more likely that price taps into this area, or maybe even that area there, most likely this one here, but we do have that little hook point there. But like I said, it's a very subjective area. The best thing to do, truly, if you want to remove as much risk as possible, is you remove that ray line and this one, keep that one if you want, and you do have that point there, so you could mark this one on, because really and truly all you want to see now is if price does that, pushes back in, gives you insurance entry, and then you can play the run. Or if price extends, right, comes all the way back up here, because it can always push through and come further, wait for it to really come back down into this structure. It doesn't have to be all the way down there, it could be here, but wait for that, and that's where you probably have a much more higher probability with taking a trade like this. So there could potentially be longs, this and that, but remember, like, even if you get positioned in here now, what if price does this and then you get caught into all of that mess, and then price goes, you could probably decipher that, go long, and then be like, okay, well, the structure lined up, went with this, etc., etc. You make a thesis out of it, great. But where are you better positioned? Because trust me when I say this, right? And obviously I know this, but I do struggle with the execution of this, and that's why I'm saying it, is if you have the mental patience and the discipline to wait for this, and this is why it's good to potentially have another source of income, because if you're solely relying on trading, it's going to be much more difficult for you to have the mental patience to wait for something like this, right? And then to know that there's always the possibility that you may not get that, right? But it doesn't mean you're going to miss every trade in the book. You're going to just not get this one particular one. But that's why we basically forecast across all of our pairs what we're looking for. So if we eventually come here, which could take 2 weeks, 3 weeks, whatever, right, as we establish 6 days, it gets there, and then we get the push away in the flag. That's much more higher probability and lower risk. So a position like that would position you really well to then get involved. And let's say that you did get in with a decent stop loss, you compensated for 20 pips. You could probably get in 10 most of the time, but let's say you compensated for 20 or even 15, which seems like the most common, but let's just say 15. And then even if you took that into the low of this section here, you're running 16% and then 21. So even if you took it on 0.5% to play into the low there, you probably would have got your 10% and walked away with that on just holding one position. We're not even talking about scaling opportunity as well here. So look, sometimes it's much easier to just basically explain these things and demonstrate them, but I think, you know, you take these things on board and you realize over time that, you know, let's just evaluate this for a second, right? If you just isolate this, and then what did you have, right? You had, it came up here, rejected. You basically then had this. Let's say that you didn't take this because this was higher risk for whatever reason, you weren't happy with structure. Then you had the next one, right, which then evolved into that, and you got a bit put off. But then you had the internal one there, and then you had that one, right? But you can't tell me that each time it came, mentally you convince yourself not to get involved, right? And it's just one of those things, right? Even if we got the same price action coming from the next point, and I'll mimic that, and this is just kind of something that I just really want to point out to you guys to just explain that it's all in the mind. It's all about you, right? You can convince yourself not to take a trade when in fact you should be taking trades. Now, yeah, you could argue that's corrective, but it still went into the same direction. So even so, if you got your position there and it went, you still walked away with 30%. I mean, okay, you ran about 20, it pulled back to 10. Would you really, in a real case scenario, let that happen? You ran to about 17, it pulled back to 6. Yeah, you're not going to really want to hold through them massive swings, but obviously it's really up to you. But you can see, even if you came over here and you, for some reason, you probably walk away with 10, I'll be honest with you on this one, just because you know it has high probability, but you're holding 10% there. Then you get positioned on the next one, right over here, so you even go bigger stops, and then this went down to roughly around about 7% pullback. Yeah, you could probably say 5% you walked away with there. And then on that one, let's say that you weren't able to catch it, it dropped off without you, or news, you stayed out, and then there's another trade even here where it finally ended off and went to 5% into the low. You'd probably take the manual close at 5% because of where it's positioned anyway, regardless. So overall, you know, looking at that period there, I'm just going to measure that off, and I just wanted to state that out because there's just so much value in these areas. So that was over a 47-day period, but once again, over a 47-day period, you took 3 trades on one particular pair. You took 10, 15, 20% over a 40-day period. Now, to some people that might sound like, oh well, you know, that's a long period to take only 3 trades, but when you think about it, you took 3 trades, perfectly well executed. You studied and understood the structure really clearly well. You knew the market direction dominantly, and okay, maybe the last one you may have not taken because when I look left, it did trade into that low set and it started pulling back. So let's just say you avoided that one for whatever reason. Even if you walked away with 15%, right, it's still much more than most people, right? And this is just one pair alone. It's actually, in fact, what you do between these periods that actually messes you up. Now, when I went through my trading and I kind of just sat down and really evaluated it and over trading and everything, you wouldn't even believe it if I tell you, right? I found that I was executing flawlessly, right, on a majority of my trades. And then I would be up like 10, 15, 20%, right, in a week, which is insane, right? Obviously, yes, there was over trading in there, so it's one of those things. But what then happened was I then opted into higher risk positions, and then the execution quality dropped, and it wasn't flawless execution. Then when I declined, and let's just say this was my equity curve, so I was like up here, I was doing well, and then for whatever reasons, euphoria, etc., execution just started dropping, and then I came back down here, and then suddenly my mind switched back, and I was like, no, I need to fix this, I need to focus, get my head down, and then suddenly back up, right? And then I created a barrier over here, a mental barrier for myself, right? And then within this mental barrier, every time I got to this point, I somehow ended up taking myself back down, and then maybe I'll decline a little bit, and I'll be like, no, okay, no, that's not me. Let me go back to what I know. And then I went back, and then I kept doing this. Now it's funny because I haven't experienced this in a very long time, but because I experienced it with a high level of intentionality, and I kind of just understood what the hell I was doing, but at the same time I couldn't take control because I was too emotionally involved. I then realized actually something which was so important to me is I'm taking very low quality trades, right? Now I'll be very honest with you, okay? The trades that I was taking were probably in here, right? Let's say that's what we're looking at, that's the structure, and I was getting positioned in here. Now if you were trading this on the 15-minute, ask yourself this, right? You're trading this on the 15-minute, or you're trading this on the 5-minute or the 1 hour, would you be taking the trades here? No, unless you had like a clean middle section, right? But you'd be waiting for that, and then this, and then you'd be ready to go, right? So I'm going to ask something for a second, is why the hell would we be getting positioned in here on a higher time frame when in fact we should truly be waiting for that, unless we had something very clear as day? Now there was some levels to decipher through this, right? But I realized, right, I've got a much better edge when this pattern is completed and the market direction is very clear. Now the market direction is clear, and we are looking for upside potential because the DXY is showing that, and it doesn't mean that taking longs is necessarily a bad thing, but at the same time, what's even better for us is being more patient. And for me in particular, because that's the type of trader that I want to be, right? I want to be on the right side of the market at the right time, but there's no such thing as the right side of the market. Obviously the market's random, but having enough confluence in my favor to say that this is much more higher probability for this to potentially happen. And the misdirection that was happening, right? So when I say that I was focusing on trades in this area, listen, I would get zoomed in for whatever reason, right? Because I was so used to looking at it on the one, because for so long I was clear that this could have potentially been the structure. I mean, look, there's subjectivity up to here, subjectivity there, and then at this point here. But at some point you need to know when you're going to draw the line in the sand and say, no, this is the structure. This is the structure I'm looking at, and the market is gravitating here because it's going to complete on the structure. Okay, great. So I need to dominantly be looking at longs. Like, why am I sub-focused on the potential shorts, this and that? It's because you get so zoomed in that you lose vision of what's actually happening, right? Like at one point I actually thought the market was going to reverse from here, which is possible, don't get me wrong, but when you really look at things now, you have to ask yourself that, and the market does that. The market's job is to convince you, even though it's going in a direction with misdirection. And how do you get convinced? It's by utilizing anything below the 1, right? And I've realized that. So even the 4 is very clear here because we are within a larger structure, and it's even clearer now. But when you look at it like this, right, this is where, okay, you'd be a little bit more clean. You'd be like, okay, that makes sense. This is where level of subjectivity comes into it, and it's like, that's the possibility, right? But we'd be looking at potential continuation. This goes, and then this could evolve into many things. So at that point there, you don't want to really mess about with it. So I just wanted to kind of point that out because I learned something major there, and I think that could be of value to maybe 1 or 2 people listening to this, maybe a lot more of you, but it's just kind of knowing where you truly have an edge. Now, look, it's a fine line difference of changing your life, right? This is where you are right now, this is where you want to be, and this is where you're going a lot of the time, right? And you're basically moving between this scale here. Right, this is where you are right now, that's where you don't want to be, and that's where you are, and you keep just dipping like this. But when you really look into it and realize why you keep dipping there, it's because you're basically getting positioned in that a lot of the time. I realize that, where if I just go to a pair like, let's say you're a CAD, what's clear as day? Well, you got a 1, 2, 3, okay fine, you've got that, doesn't have to fill it just yet. But what happened? Well, you got positioned in here, let's say, for whatever reason, you covered yourself up here, you walked away with a 5 to 1, 4 to 1, probably less. Let's just say you got positioned in here. Okay, now this is, to me, this seems a little bit risky, right? Because obviously it's not as clean as day, but let's just say you took 50 pips, this went in, yeah, you'd walk away with 5 for sure. Like, you've been in this trade for some time now. But if I look at how long that took, so you get positioned in there to around about here, yeah, about 20 days, give or take. So something to just bear in mind, right? That structure's there. Why are we looking for the most refined? Why are we looking for the most tightest stops? We don't need to, right? That's where a lot of the mistakes are being made. Is we're looking for, the most tightest, the most incredible, like, yeah, okay, you're gonna catch some of them, but trust me, like, when I've gone through my data, especially with the overtrading side of things, a lot of the time it wasn't worth it, really and truly. Like, for me personally, maybe for you it might be different, but for me it wasn't worth it, truly. Like, okay, 15-minute, don't get me wrong, like, you can get in those refined stops and stuff, but a lot of the time it's not the easiest one, trust me. Like, at some points in the journey I was like, hang on a second, like, how the hell has that come back and just tagged me out and gone? Well, it's the most obvious place, that's the thing. If you look at the structure like this from a 15-minute perspective, you can see it. But if I pull this back and you look at it like that, right, you'd start thinking all sorts of things. You'd be like, okay, let's do that, we're not cropping for any wicks, we're going to look at it like this, and then you have that drawn on, and then something like that happens, and you could convince yourself in the moment it's not quite ready, but really and truly that's ready right there, right? But I doubt you would have even considered taking a trade right here, right? Because at the same time there's a lot of subjectivity around this, right? You just don't know at this point. So let's say that happened, you'd want to really take the trade here, but you'd be fearful of getting taken out. So what you could do is set it here, put in there for even 15 is well protected, honestly. If that drops off on you, then you'd be pretty disappointed. So what you're going to wait for? You're going to wait for clear confirmation, right? And we're on the 15 right now. Let's go to the 1, and oh, okay, the 1 did spike up at that point there, but even so, you got that clear confirmation. This was CPI, so even so, man, you're not going to want to get pending order straight into CPI. But if you did, obviously that happened, and then instantly you were like running 2.4. I'd probably lock in about 1% and just leave it, and then yeah, it wasn't the one, but eventually it did go, obviously, as you can see. It's just one of those ones that again, who is going to be trading like that? Like, yeah, the structure made sense, everything was there, we could have convinced ourselves not to really get involved in that. But something that I've realized as well is that, like, the market's not perfect, and neither are you, and you shouldn't be, and you shouldn't look for perfection. Like, look at a lot of these structures, just look at them, you can see clear as day what's happening, right? You can pick out and choose, your eyes gravitating now, it should be, to these structures. How can I get positioned? Well, I can get positioned well enough in there. Look, I have a push, we've cleared that low, all right, cool, I can get in here. Oh, the stop loss is 35 pips, not too sure about that, but to that low I've got about a 3.6, so I can manage it into that. All right, great. How long am I going to be waiting though? Let's see. Well, you get into your position, it gets to 3.6 in a day. Okay, fine, that's not too bad, right? There's a position in that, but at the same time, there's something in there that convinces you not to take it. It's clear as day, right? Now, you're not always going to find the cleanest day, but you're not going to take a trade in here because that's simply a squeeze, right? So if you took any trades in there, you need to really, think about your trading a lot. Over here, arguably, there was no confirmation because you would want to see a turnaround there at some point, but even that first little wick was a little clue. Then you look at this bit here. This was something, but again, not the easiest one for most. You can see we tapped into the low over here, we pushed up, continuation, and we moved. So again, let's just say for whatever reason you did try to take this, okay, and you position yourself higher time frame, 88 pips. Eventually this ran for, call it 5%. When you're running about 3 point something, it pulled back for about 2, arguably maybe 2.6% on that. Be taken out here. That's very aggressive. I think you'd want to hold percent. You ran about 5, you'd probably walk away with 4 at a minimum, right? 4 at a minimum, let's say, over there, and then you would have got continuation for the short when market did turn around at you. But let's just see how long that period was. And I'm just kind of demonstrating these things because I think there is a huge amount of value. So you can see that's over a 30-day period to make 44%. Is that ideal? Is that really the way that you're gonna pass your assessment? Yeah, that's one way, but it's going to take a lot longer, and a lot of the time that's why we do go down and refine. But that's an 88 pip stop loss. You understood the structure. Then if we get a bit more granular with this, obviously this is where you want to really start fixing your trading, and this is how you kind of level up. But a lot of the time we'd be trying to take something like that, and look, honestly, I don't see anything extremely wrong with that because the psychology of the whole trade is here. But at the same time, you have to really realize that that's not going to build your consistency fully alone. There's so many layers to something like this. So even if you took this, let's say you took it here, your stop loss was, call it around about 40 pips. Eventually with that play, you ran around about 6, pull back for, you'd have 3 locked in at least, and then eventually you went up for about 10%. Yeah, so around about those periods where you hit the 10% mark, or you just missed it, but 10% would have been really your target area as well, so you would have been out of the market roughly around about here. But then again, you see, like, this is another thing. Over that 30 odd day period, you would have then hit your marker. I mean, Euro Swiss is a perfect example of a very well thought through trade that ended up playing, right? We had left shoulder, head, right shoulder, inverted, of course, if we look at it like this. And then let's say you took your entry on the candle here, you took it with, call it 28. Oops, just quickly flip that bias. You took 28, call it 27, doesn't really matter, and then you basically that trade. Depending on your stop, obviously you could have gone tighter because there was a tighter entry in there. You would have been running around about 10-ish%. So I'll quickly just put on the entry that we would have really originally been looking at. I'd say 20 was perfect, gave you a little bit extra breathing room. You didn't need 20, to be fair. You could have gone less, but just in case of whatever worst case scenarios could have happened, in the end, that was the fine line difference of roughly 8-ish% that you'd be sitting at right now. So just something I really want to point out, that if there's great positions out there, and then there's okay positions, and obviously this is more on the okay position side of things because obviously this is not the best trade in the world, but there's some of them out there that's phenomenal, but you're missing them because you're too busy getting caught up in these areas as mentioned. So that's basically what I really gathered out of the data that I was looking at. There was a lot more to it. Obviously, sometimes I was over risking and under risking on the wrong positions, and I was messing around with risk a little bit where it didn't really make sense in the overall, and obviously did lead to levels off, self-sabotage, disciplinary issues, and so forth. So just bear that in mind, that if you mess around with risk, then at any point, if you psychologically come out of hand, you can really sabotage and set yourself back even further than you originally set out to be. So something to really bear in mind. But I mean, this was more of a very psychological one, and just kind of going through a lot of the things that I've learned over the course of this month. Obviously, this month's been a lot harder for me than the previous months. Now, maybe because I have a lot more capital, or I couldn't really blame market conditions, because when market conditions change, I should mentally be shifting as well and being like, okay, this is an area where I'm more patient. But what was happening is I was telling myself that, but I still wasn't acting in accordance with what I was saying. So aligning myself with what I'm saying was thoughts, words, and actions. Having them all fully aligned was where I did actually struggle a tiny bit, but I am working on that massively. Now, obviously, still below this area, it's likely we are going to come into those areas right up here. How we get there is still unforeseen. This can still drop off and create a little bit of a mess for whatever reason, taps into that. That's not possible. I mean, that is possible, it's not probable. What's very probable is that we get some level of a continuation, and we do that, right? And I think that makes a lot of sense. Obviously, us being so close now, we could just impulse and get there, especially with news just around the corner. However, I just want to bear this as a forecast that if we did get this, it makes sense for us then to just really push through and tap into the next areas above. Only reason being is because we'd basically be coming off, this is the impulse, we'd then be mimicking that over from the break, and then it lines up with those areas there. So then we could see the clear push above, catching people out on the wrong side, which the market is best known for. And then everyone starts thinking about longs into those areas and whatnot. Then what happens is it taps into a hook point, near misses that, doesn't really need to tap into it, it's done more than enough, structure's complete, pushes back in, we get the insurance entry and we go short. You were able to stay out of the very difficult areas to trade, where there's a lot of subjectivity. Obviously, in these areas, so much can happen. It can pull back and come back up, create an ending structure. And this is not really where you want to be trading, within this structure. Okay, when the structure is complete and it lines up with something, okay, then we can see it with internally with all of this. And then we had, we had layers to this whole overall thing where we had this. Okay, then we kind of came in with a 1, 2, 3 at the end. Then we evolved into a reversal over here. Then that lined up with, let's call it that. And then over here we had, call it a internal hover. We broke, insurance entry, that would be a low risk position right there. Because of the layers of everything, we came in with structure, we tapped into this, we responded to it with a reversal, we then came in, respected that, broke the low of the reversal, created the next continuation, and we went short. So you can see that you can map that whole story out, you can understand all the layers towards what happened, and it went. And I think it's a very interesting thing, because when you can read price action, you can basically anticipate on a much more higher degree, let's call it forecasting, of what's going to happen next, or what could potentially happen, which is a better way to look at it, because we're not looking for absolutes, we're not looking for perfection, and we're not looking for what definitely is going to happen, because if we are, then we may miss the message that the market's just given us. For example, look at this run as an example, right? If we were just waiting for a clear structure like that, we'd still be waiting and the run would be complete, right? We didn't get it, it wasn't clean. But what did we have? Well, we actually had layers in it, and then if we get granular, we can see that. We can then see, if I just kind of put on the line charts a little bit more clean, you can see in here that you had this low just over there, which was tapped into, and then you had that. And if I put that back on, you couldn't really see it because the wicks would kind of mess with your point of view a little bit. But we basically completed, we correctively came in, we tapped into that area of liquidity, we then pushed away, we created continuation, and then we pulled back, sharp pullback, and then it just got corrective and went. But then if you look at it again, if you get granular, you can then see that, okay, once we completed off here and we started pushing away, it was then becoming very obvious that we're going to come in and test these areas. So then if you were then to get positioned in these areas, there was the potential for so many different things. Line chart again reads very clearly. Not the easiest one here because this is a little bit more corrective, but you could really read through this. You can see that there is structure. It's just what's your strategy around this? Like, there was structure. You can read through this clear as day. There's nothing really messy about this, right? The only messy part is that you convince yourself not to get involved. Obviously, I'll be honest with you, like, it wasn't the best market conditions to trade. If you didn't take a trade in there, fair enough. I think, sometimes that's a very smart move because that that's not where your edge is, right? Where do we know where our edge is? But something like this, perfect example, right? This is where our edge is. Let's say price taps into the override over here. I'm just going to move this over here. Price taps in, completes on the 1, 2, 3, pushes down, gives you clear as day. Oops. Clear as day, continuation, right? You get involved here, stops, let's say above, and then the next continuation. You wouldn't really want to be taking that, but you could if you got into that. It could be a scaling, so you get in there, stops above, and then again you play that. So probably in this scenario stops could be tighter, but I'm just kind of pointing that out as an example that you have an edge, just know how to use it. If you're struggling with consistency and you're struggling with being in congruence with the way that you're trading, it's your lack of discipline to follow your trading plan. You have a trading plan, you understand it well enough to see and execute sometimes in accordance with it, but then a lot of the times is you understand too much about the market as well at the same time, so that when other things are happening, you're taking trades in here when your trading plan doesn't dictate that. Your trading plan might dictate something like this, and these are where you're making money, right? When you're getting involved in these trades. But when you're taking trades like this is where you're losing money. You're trying to get too tight, you're getting shaken out the market's just going corrective, you're getting involved in these areas, and that happened to me, and that's why I'm explaining it, because this is where my edge is. My edge is in these sequences and these moves, but from time to time we're not in those areas. We're not trading in those areas. We're trading in these areas. We're trading in these areas, and I'm trying to make money in those areas where, in fact, that's not where personally I'm making money. I'm making money in these areas I showed you up here. This is where I'm scaling. This is where I'm moving forward. This is where my life is improving. But over here, this is where I'm pulling myself backwards. I'm not moving forward. So understanding that and really just experiencing the back and forth, the losses and so forth, it's brought me forward to the understanding that I need to avoid trading in these areas because that's not where my edge is. Now, obviously, for obvious reasons, I'm just going to invert the chart. If we did have something like this where price did come up and it created something like that, right? So then we had something like this, I would get involved on that trade. Doesn't mean that I'm just going to wait for the completion of this. I'd still get involved on this, and I'm just going to invert that for a second. This is upside down actually. So I'll get involved on here, even with insurance entry, it doesn't really matter, but I'll get involved on that, and then I'd go long into that area, taking a 6-to-1. So if something like that shaped up, that's a no-brainer. Like, I would take that because I understand that this is a part of the ending structure within the structure, where we have a 1, 2, 3, then we have a 1, 2, 3 into that, and then I know that this area becomes even more high probable for a sell, right? But like I said, we didn't get it, and because we didn't get it in the way that I was anticipating, it's one of those things where it's just like you leave it, right? You know your trading plan, you know what you're looking for, you know your trades. If you don't know them well enough, then you need to go and learn them. So again, as a realization of me not taking those trades, of where I have an edge, I'm going to go back and obviously do some more data collection on my trading plan to get refamiliarized with it, because I've taken so many trades which weren't in my plan that I've deviated away from it. So now I need to build that lens back and just make sure that I'm only solely focusing on what's in my plan, and that's going to help me move forward and move that bar closer into my direction. So I know this was a very long video, but I wanted to kind of explain those things, especially if you did listen to the whole video. I hope you found a lot of value from it, because obviously this video was based upon a lot of my experience of what I was doing wrong, and then in correlation with as I recall for what I was doing correct. And the things that I was doing correct pushed me so far forwards, but then these are the sort of things I experienced when I moved considerably far forward. I started falling backwards, and the things that got me going forward were things like sequence, studying them, understanding them, and knowing where my edge was, and then being able to take advantage of things like that. Right, so just want you to bear that in mind, that it's one of those things, like if you give up on trading, you're not gonna learn from these things, and you're not gonna move forward. Now, don't get me wrong, like sometimes even I, at a late stage in my journey, do feel like giving up at some points, but I know deep down that that's not really going to serve me and push me forward. Like it's just one of those things. Like, I'll be honest with you, like things don't go really well in your direction, you don't move forward that much, you do get the sense of just, you know, wanting to give up on it and just being like, well, perhaps maybe it's just not for me, I'm not cut out for this, I can't do it. Well, these are all negative thoughts, and they're not really going to serve you, because the truth behind it is you're fully capable and you can do it. And as I've demonstrated and shown in multiple videos, right, it's very, very possible to trade. The market is giving off the sense that it's random, but it's very, very planned in accordance. Like, you know, we way ahead of time, we knew what was happening. If you got positioned to go long on this run, you probably 95% of the time would have made money if your stops were in the right place, which is very easy to say in hindsight, I'll be honest with you. But like I said, it's just one of those things that I've experienced time and time again, and I've seen the market do it. Like, I can tell you clear market direction, right, where the price is going, what it's going to be doing. Obviously, price changes. I'm not always on the right side of the market. A lot of the time that I can be wrong as well, but it's clean, it's clear as day. So there's a lot of things happening in the market. There's been a lot of impulsive price action. Obviously, we are still waiting for a lot of pairs to shape up fully. I wouldn't allow myself or yourself to get caught in the wrong areas right now. Great tip for somebody who's trying to build consistency is try to lower the risk of your trades as much as possible. Okay, not just looking for low risk. Even if you're looking at a high risk position, ask yourself the question, how can I lower the risk of this position? What would price have to do in order for me to take this in the most low risk way possible, and what can I do in order to take them in the most low risk way? Right? When I say low risk, I mean just lowering your risk as much as possible. So in this particular scenario, where let's say we have GA in this range, right, and let's say we're only looking at shorts, okay, obviously there is the potential for it to go long, but let's say we're only looking at shorts. How would I look at that for the most? Well, if price did this and did this, really and truly, this can still evolve and do that, right? So when you've kind of looked at that like that, then you have to ask yourself, okay, well, in fact, do you know what? If I'm going to look at the most low risk, I'm going to wait to see if this becomes a corrective middle section for any reason, comes in here, comes up for a 3 touch, pushes back in, gives me an insurance entry, right? And then I'll look to go short, right? Simple. I've instantly found a way to lower the risk of my trade. So I'm no longer just looking for a risk entry at the top. I'm looking for a completion of the 1, 2, 3. I don't want to take the 3rd touch because it's still above this whole area, so it's a bit more higher risk. I'll wait for it to push back in below that ray line, give me continuation, and then go low. Anything less, I'm not going to take. Okay, let's say in the scenario that this trade was a 2 touch, not a 3 touch, and I missed it for whatever reason, fine. right? It went at 2 a.m. I just wasn't able to catch it. I'll wait for the next one. Well, we've basically got the reversal structure in now in our favor. We just wait for the next one. Now, are we going to take the trade here? Maybe, maybe not, because the thing is, you might argue, well, you might argue that you had something like that. So because you had something like this, you don't want to just be jumping into a trade there, because then this could evolve, and then it doesn't do that, it does that, and then ends up being a larger continuation upside, which isn't wrong as well, right? This is still possible at that point there. So bearing that in mind, I want to still lower my risk as much as possible. So if I get a trade that breaks that low and then creates something through it, I'll still look for shorts, right? And I'll look for shorts there, because the overall everything is there, right? This is still in play. That's done. Then we're breaking. We're actually at the low, but we've broken through it, and now we're creating continuation. It's still valid for the shorts. So then I can basically look to get positioned on that. And if it isn't the one, well, I've still looked at a way to lower my risk as much as possible. And then in terms of sequence, we'll have impulse, correction, continuation, correction. Next phase is impulsive. So then if I'm looking at a base minimum and I take the tool from here to here, then I'm looking at it breaking, coming into those areas there. That lines up, that makes sense, makes it probable that this is probably going to be an impulsive leg and it's going to make its way down to here. If it ends up being corrective, then it is what it is. We just have to learn to trade in those market conditions as well. But just want to basically point that out, is simply waiting for something like this. You have to understand the risks with that. Even though that could look perfect and that's in your trading plan, that isn't going to make you money 10 out of 10 times, right? That's not the one. Even if you put your A line here and you're like, oh, but it broke above, it came back in. Yeah, it's possible. And that still, yeah, it could definitely be good. But at the moment, you have to see what's actually happened. Like, if I replay this back a bit and I put price here, oops, what did I just do? I think it was, yeah, okay. So then you had price here, and then let's say price did this, where, okay, it broke above and it came back in. Price would have to come significantly down, showing me that we had impulsive price action, correction, impulse to follow, right? And we're in a clear run of momentum. If we get correction here, it's just way too high risk at this point, right? Even though that we've broken the high, we pushed in, and now we're getting that correction. Yeah, it's on the higher risk side. Doesn't mean you can't take it. It just means that you have to understand the risks there, because something like that could just be a part of this. Right, and then you zoom out on the 4, and what was it? It was nothing. It was just a piece of nothing. We didn't have 4-hour confirmation. We didn't have anything in there. We just had a bit of a corrective squeeze, and then it just did all this stuff, and then it pushed higher, and it became a continuation to move higher. So look at the 4-hour now, right? The 4-hour is looking pretty good. If we close like this, then we have our first rejection confirmed on the 4-hour from the area, but that's still not enough. Then we go into the 1-hour. We look for a bit more weighted time frame. Now, when you look at it on the 1-hour, this doesn't look very nice at all. Even if I flip it over here, what's actually happened? We haven't even moved that far away. So what do we want to see? Well, we want to see clear confirmation. We want to see a push down here, and we want to see that, right? If price just carries on being corrective and it's like this, then that's a clean message from the market that we're not going to look to go short anytime soon until we get a clear push away, because that's not how we want to see price move away. Look at these areas. Look how price moved away. Look how price moved away there, over here. I'll take the next point over here, right? When price is ready to go, it goes. Just point it out, right? And a lot of the time, if you look at it, it's either London session or Asian session. So just want you to bear that in mind. This one was actually New York session over here, which is interesting too. New York, and then Asian session. But even so, just want you to bear that in mind. Like, it doesn't necessarily mean that it can't go from there if it's corrective. It's just we want to see that momentum kick in. So coming into the end of the week, obviously we need to wait for the weekly closes. If you look at this on the weekly, that doesn't really look bearish just yet. You need to see some sort of daily turnaround on that. So if I go to the daily, what are we seeing? Well, we're seeing big bullish candle, and now the decider, what's actually happening in this area. And it doesn't actually look like we're going to the downside just yet. It actually looks like we came to the downside, we squeezed correctively, and now we're getting an impulsive push higher where price could move higher before we come short. And something like this would potentially be possible, where we move up and then we come back in, get continuation, and then we move into those lower areas there. Just be very careful, because you can see that all that time we spent on the 1 hour and the 4 hour and 15 and stuff, we were looking at the shorts, right? But then again, you look at it here and you're thinking, you know, it's still not the best one in the world compared to something like, call it the JP225, where if that ends bearish, what do we have? Well, we have all-time highs, we have the reference point there, we've wicked through, and then we've ended bearish with a pin bar at the top there. What do we need to next see on the daily? Well, we can then see on the daily that we had impulsive follow through. Price ends up around about here somewhere. We look at it on the 4 hour and we're seeing heavy momentum, huge bearish candles. Right now is a great sign for shorts as well. We're seeing impulse, correction, impulse, correction, impulse. Not the cleanest, but it's there. And then refining on the 15 to just kind of make understanding of what's actually happening within it. Not needed for the trades though. And then down here, you're just looking for clear, deliberate price action, you know, and then you're looking for that sequence where we're moving in that sequence. At the same time, you're backed by the higher time frame, and that's where you usually want to be a lot of the time, right? Look at this on the daily, right? What are we backed by? We're backed by all this daily momentum, backed by daily momentum to the upside. Obviously, with the DXY being a bit on the bearish side, you don't want to really be jumping in something like that. But a lot of the time, backed by bearish momentum as well, backed by bullish momentum, backed by bullish momentum again. So utilizing that, and then you can see it on the weekly a little bit more clear, right? What is the position backed by? What's a better way to get positioned? Well, definitely get on the side of the higher time frame, right? Look at the weekly, week on week, we're going bullish with WTI. A lot of us will going into the lower time frames and being like, well, ooh, this looks like it could short, it could do that. It's because we weren't really looking at where the weekly momentum is. Like, yeah, we know we're in a bull run, but then we're too busy fascinated with a potential short that we miss the longs. So keep your head on straight, know exactly what you're looking for, and keep it very, very laser focused. And I think that's what's going to really help you, utilizing that sequence, the positioning, the as mentioned, the overall understanding of your trading plan as well, where your edge lies, how you can best utilize that. Don't worry about missing a lot of intraday positions. Like, obviously understand them, study them, improve, and that's a major one where you can really just learn from this stuff and really just move forward. Like our US 30 as an example, we basically had countless times. I think US 100 is actually a much better one to just show this one little point on there. Is you know, we had this push, again push, small little push, this one failed but eventually did come, and then this one failed and then went, but then again you get something tight and small push, tight and small push. These things tend to happen quite a lot, right? And if you get on the right side of these, you can actually be very profitable. Obviously, again, it's not the easiest to decipher in the world, but they're there. There's little edges in the market that can make you a better trader, and if you just learn to understand the small things that can just make you money, you can just rinse and repeat. You know, if that's a part of your trading plan for, let's say, US 30, 100 and so forth, and you basically just look for tight continuations like that after an impulsive move, then a lot of the time you could make some decent money, because when it moves significantly far away, and if you get positioned well enough, you can probably get into that. So let's say you had the 1 2 3 completion, you took it in here, stop loss was around about there, 43, and then you'd be basically holding that. But even to this point, you ran around about 10, you even ran 13ish%. Let's say you went in aggressive with 10% at that point anyway, locking in below that structure. Obviously this one here, subjective, you're running around about 10, 11%, 12%, 13%, 14%, 15%, 16%, 17%, 18%, 19%, 20%, 21%, 22%, 23%, 24%, 25%, 26%, 27%, 28%, 29%, 30%, 31%, 32%, 33%, 34%, 35%, 36%, 37%, 38%, 39%, 40%, 41%, 42%, 43%, 44%, 45%, 46%, 47%, 48%, 49%, 50%, 51%, 52%, 53%, 54%, 55%, 56%, 57%, 58%, 59%, 60%, 61%, 62%, 63%, 64%, 65%, 66%, 67%, 68%, 69%, 70%, 71%, 72%, 73%, 74%, 75%, 76%, 77%, 78%, 79%, 80%, 81%, 82%, 83%, 84%, 85%, 86%, 87%, 88%, 89%, 90%, 91%, 92%, 93%, 94%, 95%, 96%, 97%, 98 yeah, 8-ish%. You'd probably want to go a little bit tight there, probably 685, and you'd probably be out of the market just here, right? But even so, for a trade like that, I think within a day or two you've really capitalized on it. Yeah, over the course of 3 days you've made around about 6.85. Just another example, once again, it's just there's another opportunity here where we've retraced back in. You could take it here, same situation. Let's say you got out in the same place again, 6.33. You've got your first trade, you're scaling, and then you're in for that trade as well. So guys, I'm going to end it on that note because I'm just throwing a lot of gems here and the video is getting on pretty long, but I hope you found a lot of value in this video. I know that there's a lot to take in with the markets, but the major takeaway that I want for anyone who was watching this to take is obviously the level of patience, waiting for it, really getting disciplined and understanding your trading plan, and just taking everything step by step, and just understanding that money's not made from just simply taking action. It's from working in accordance with your words, thoughts, and then taking actions in accordance with that, but having the mental discipline to do those things. A lot of the time we end up going back and forth because we lack in those areas. Now, it's not a case because you're not good enough, it's not a case because you can't achieve it, it's a case because you just need to learn that one simple thing of that, let's say, that mind-body connection, where essentially what you think is going to relate into what you are saying, and then what you're saying is going to relate into your actions. So you want to basically have that filtering process that you are able and fully capable to do it, but you just need to do it with a lot of absolute intention, and you're going to get there a lot quicker. So guys, thanks for watching this. I hope you found a lot of value in the video, and I'll catch you guys in the next